Good afternoon. It ended up being quite a happy Friday for the Australian share market. The ASX 200 this afternoon was up by about 56 points or 0.9% to 6,272. Best day that we've had in 2 weeks, and we've also hit the 10.5-year high as well. The backdrop in which the market managed to put together such an improvement was quite impressive, considering that around 2 hours ago, or with 2 hours of trade left this afternoon, the US, after months of threats, imposed 25% tariffs on more than 1,100 products, $34 billion in imports making their way from China to the US, potentially another $16 billion, which could hit in coming weeks as well. So this was already quite well telegraphed, hasn't actually had a bad impact on the share market at all just yet. More attention will be paid on China's retaliation moving forward, and Trump did already threaten that if China does retaliate, it would potentially increase its tariffs even further, potentially expanding the scope to about $500 billion in imports. So China already said it would retaliate in kind, that it would have to fight back, matching tariffs blow for blow, but not too much provided in details about the actual timeline of when this could take place. This is certainly going to remain a main focus for our market and markets around the region as well in coming days and weeks. And while the market shrugged this off today, it certainly is a risk moving forward. But today, all sectors were up. 70% of companies on the ASX 200 improved. Mining stocks contributed most to the improvements. They managed to shrug off weaker commodity prices and lift for the first time in 6 days. Banks also improved, especially in the afternoon. The big four were up as much as 1 to 1.5%. Energy stocks managed to lift as well, despite a bit of a pullback in oil prices last night. Not much in the way of company news today, but the best performing stock on the ASX 200 was St Barbara Mines. It rose 7%. Partly thanks to a record quarterly and annual production update, and also higher gold prices, which have jumped for 5 days. The worst was Ingham's. The chicken company was down 3.5% on a price target cut. Now, outside of the ASX 200, one of the worst was Elders. The company provides services to the agricultural sector. It fell 15%. It warned of lower profits, partly due to the drought and lower cattle prices. Tonight, all eyes will be on what the retaliatory measures from China moving forward, but also an update on employment growth out of the US half an hour before the open of US markets. The Aussie dollar, 74 US.